We're going to give everybody a couple of minutes to get settled in here. Welcome to our monthly conversation with Rick Braa. We will be talking about the PPP and the Employee Retention Credit today. Special thank you to US Bank, our sponsor, and I will go ahead and turn this over to you, Lex.
All right, so thank you for joining us today. Obviously, we have Rick Braa here, who's going to be talking about the PPP and all of the issues related to that. I know that went out, a lot of the guidance on that went out earlier this month, but for those of you who are in the process or in the process of applying, Rick has some tremendously helpful information that will help you navigate through this process. Also, Rick, you're going to be talking about employee retention credits too. That's been a high demand subject for our membership, and Rick is going to be covering that in depth today. So I'll just send it off to you, Rick.
All right, thanks, Lex. So pretty exciting things have developed over with the new round of PPP. So we're going to dive right in. So the Paycheck Protection Loans, the second draw, which includes a new round of first draws, $284 billion. It ends at the end of March. As of last week, the information that I was being fed was that the SBA doesn't look like they're going to run out, but I wouldn't trust that because they've had so many errors. It's been a bit of a disaster. So for you, those of you that are out there that have had errors when you've applied, kickback saying your application is under review, I can attest that that is very common right now. About 20% of our loans have been kicked back. And you kind of go to the back of the line after that. But the SBA held a webinar yesterday with the lenders and said here in the next 1 to 2 days, there'll be a new portal where lenders can work with their clients and go clear the errors. Hopefully they'll be able to clear them up this week so that you can proceed. So the second round, you also want to make sure that you have a 25% quarter-over-quarter decline in sales. At any point during 2020 over 2019, I don't think there's many people having a tough time with that. So coverage period for second draw loans, 8 to 24 weeks. There's no alternative coverage period for the second draw because it's only about 26 weeks long, and we'll be well into that by the time people get funded. So for the 72 NAICS codes, we're at 3.5 average monthly payroll, and I put a star next to 2019 because they give you lots of different ways of doing it. The most common way is going to be 2019 payroll, which includes tips, by the way. We saw some people missing that last time. It's limited to 2 million per EIN, maximum 4 million for corporate group for second draw. And some of the questions that I've gotten are, last time I applied at the corporate level, can I apply at the individual EIN level for the second draw? We spoke with probably 5 different law firms. All of them said, no, do not apply at the EIN level if you have applied at the corporate level last time, because they won't be able to find your number. And it may kick things out, it may complicate things, and nonetheless, it will certainly slow things down. So stick to the way that you filed last time. That is what all corporate counsel has told us. Don't vary from how you applied last time, because they've got 2 separate portals. They've got a first draw portal and they've got a second draw portal. So you could get into a different portal if that's the case, because the first draw loans are 2.5 times. So you can't ask for 3.5 times average monthly payroll in a first draw scenario. So we've got to be careful that you follow the same route as you did last time. We spent significant time on this, so we feel pretty confident, at least the attorneys do, that you need to stick with how you filed last time. So what's included in forgiveness? And this is a big deal, as we'll see when we get to the employee retention credit, because they made several things retroactive, or they clarified things. So payroll, obviously, wages, bonuses, commissions, hazard pay, state and local employer taxes, not federal, benefits, and they added on group life, disability, dental into this. They clarified that somewhat, in vision, and tips. Remember the tips. Rent, obviously, same as last time, utilities, mortgage interest, and then they added some new things in, or clarified them. So interest payments on any debt prior to 2/15/20 So that wasn't clear in the last bill. It's clear in this bill. We've got covered operations expense, and this is a little bit confusing because the way that the language is written in the bill is it kind of lumps everything together in a tight paragraph or so. So a lot of ands or ors, but basically in a nutshell, business operations, product or service delivery, and it's really the software or the cloud computing service that facilitates. So we don't believe that this includes credit card fees. So processing payroll, processing HR, these are basically pieces of software, bringing sales in. If you use a BI tool and you hook up to your POS and you're pulling it into another piece of software, that could be considered allowable. Accounting and tracking. So if you use an online version of QuickBooks or Restaurant 365 or something along that line, that's what they're really talking about here. Inventory, cloud-based tools, and anything to keep track of your records and expenses. So do we want to stop and take questions along the line here?
Yeah, Lisa, what are some of the questions in the chat?
Yeah, we have one from James. How can we find our SBA loan numbers for the first round draw? Our first lender did not include those numbers on the loan documents we signed.
Yes, that has really been a difficult thing because the big banks did one of two things. They didn't include them, or they masked them and made them their own specific SBA number. And unfortunately, you have to keep hammering the bank that you got the loan from in order to get that number. It's your loan number, it's your loan through their bank, but you have a right to get that. And a lot of the big banks have basically, essentially, forced people to go back to that bank for where they obtained the first loan. So unfortunately, you can go back to that bank and apply through them because that's really what they were after by hiding those. And it has been a pain because a lot of people wanted to use a different lender this time because they weren't happy last time. And the big banks, mostly the big banks, either didn't display those on the loan documents or they used their own specific SBA loan number.
Those are all the questions we have right now. For the participants, please be sure to type your questions into the chat or into the Q&A function. We can get those answered online for you.
Great. All right. Covered property damage costs, not covered by insurance. So a lot of people had expenses. Maybe they had a $10,000 deductible or something along that line, and somebody caused some damage to their facility, and they weren't covered by insurance. You can now include those. That's retroactive. Retroactive is the key because that's what's going to allow us to use those employee retention credits that we're going to be after. Covered supplier costs. This is perhaps the biggest piece for the industry in my view, because the way that we read it at this point is goods and services that are essential to the operations of the borrower at the time at which the expenditure is made and is pursuant to a contract, order, or purchase order in effect at any time before the covered period with respect to the applicable covered loan, or with respect to perishable goods in effect or at any time during the covered period with respect to the applicable covered loan. And basically what we believe this is your cost of goods. So as long as you're using the same vendors and there's either an implied contract or there's a contract in place in writing to deliver those goods, we believe that the cost of goods are going to count towards your 40% that you can use, 60% payroll, 40% other things. Rent, utilities, covered supplier costs is a big chunk of that. So that's going to allow us to pretty easily back these numbers back down to 60%. Because a lot of people, that was pretty restrictive last time. Some people didn't pay rent, other people deferred their rent, delayed their rent, and they had a pretty high payroll percentage as a percentage of the overall spend. So these additional, the interest, the covered operations expense, the covered property damage, the covered supplier expenses, all great things to help push that number down. And lastly on that is the covered worker protection expenditures. PPE, operating or capital expenditures to facilitate the adaptation of the business activities. So anything that you did to kind of modify your facility, pieces of plexiglass, physical barriers, moving things around. Some people added new indoor filtration systems. That is included there. I don't know a lot of people that knocked out a wall and put a drive-through in, but it's in there nonetheless. Expansion of the indoor-outdoor combined business space. A lot of people spend money on tents and modifying their facilities. There's some really cool stuff out there now that I've seen where people have really modified their outdoor space, and it's pretty appealing. And hopefully this will stick around forever, and we get to keep that land or whatever parking lot and generate some revenue off of it. So modification of any of that indoor-outdoor combined space is really terrific. And this really means something now with the old outdoor open air space new law that came in. So you can make some modifications to your facility and know that you'll be able to use the PPP money to do that. And then on-site or off-site health screening capability, other assets related to compliance with the requirements or guidance described. So big open interpretation there. So lots of flexibility around the covered worker protection expenditures, basically saying you can modify your facility and you can also protect your workers and use that, gloves and all those different things that you need to protect your workers. You'll be able to use all of those for expenses against the 40%.
We have a couple of questions in the chat. The first one, we started our operation in September 2020. Our bank said that businesses that were in operation as of 2/15/2020 are only eligible for PPP. Is this correct?
As far as I know, yes. They're back to the first slide. Must be in operation by February 15th, 2020. Now, some people have taken it to their attorneys, and their attorneys have agreed that they were building a facility. They're taking the stance that they can say that the business was in operation. They were just in construction. So that would be an attorney question that you'd have to work with, and it's a bit of a stretch. But I think that it's worth asking legal the question whether you can do that or not. But the operation, it's pretty clear in there that you need to be in operation by February 15th, 2020.
Thanks. Another one has heard that the SBA is declining PPP2 funding for if the business received PPP1 over $2 million and the loan has not been resolved. Is this true?
That's part of the hang up. There's a lot of errors that are going on. As I may have mentioned earlier, about 20% of the loans that we helped with got rejected. We did, 150 or something like that. About 20 of them were under review. And so there's two things that are happening. One of them is this under review error that is holding things up. The second is actual errors in the bugs in the SBA system. As they launch new software, there's some bugs that are coming out and kicking out really ridiculous errors that are holding things up. But the under review, what they're advising is that you go to your forgiveness portal of your bank and see if you can clear them up. Now, what I will tell you is I would not file for forgiveness right now as you're going through this. Get these things cleared up, and we'll talk about forgiveness at another time, but I would not file for forgiveness, but you need to go to that forgiveness portion of your portal and see if you can clear the error yourself, but the bank really needs to work with you to clear the error. And as I mentioned earlier, the SBA has promised, because they're getting intense pressure from the lenders, a new portal that either launches today or tomorrow for the lenders to be able to go in and clear up some of the errors. And we've seen things like you didn't turn in a color copy of your driver's license. So they're actually, last time they just pushed everything through. It was such a bull rush. They just pushed everything through. And this time they are examining applications as they come through. They're asking for some proof Last time they just rubber stamped it to get the money out the door, and this time they're looking at things. So when you get down to the part of your driver's license wasn't color, you know they're putting some real scrutinous policies in place to get things through. Other things, people fat-fingered, for example, their loan number. That'll kick it out. But hang in there, work with your bank, and expect to get those errors cleared up in the next week or so. I know that doesn't help much, but we have seen, as I mentioned, about 20% of our loans get kicked out for review, and our work is immaculate. So it's pretty it's on the other side. It's on the SBA side.
And the last question we have right now is from Holly. If we change food suppliers during this time, even by contract, does it mean it wouldn't be covered if not in place by the time we get PPP money?
Well, I think it says with respect to perishable goods, in effect before or at any time during the covered period with respect to the applicable covered loan. I think that you can, the way I read that is that you can change it, that you can change suppliers if you want to. I think that's a real stretch for the SBA to come in and do some kind of an audit and say, well, you bought food from these guys. We're not allowing that expense. But I think with all of these different things, the new expenditures that are being allowed, I think we're going to have plenty of offset against the payroll costs to be able to get to the employee retention credit.
And we have one more question, but that's going to be dealing with the employee retention credit.
Okay.
So I'll let you go ahead and move forward.
Great. All right. So additional benefits of PPP, they've clarified that the expenditures that are forgiven are not taxable. That was gigantic. Imagine that you got a $200,000 loan and you have to turn around and pay $80,000 worth of tax on it. That would have really caused a real crisis. And this last piece I want everybody to really think about, because in Washington, as you know, most of the businesses here really struggle January, February, March, have a great December, and then January, February, and then about mid-March, we start picking up and we get into the Mount Rainier cycle. But you have up to 20 days, and you got to stay close to your lender, because some of them start getting frustrated, but you have up to 20 days to sign that loan. So when you get paperwork, you have up 20 days to sign it, and then they have up to 10 days to fund it. And what we really want you to do is work with your lender to see, unless you need the money right now, and some people do, and that's understandable. But if you can stretch this out from when you get that loan document for up, 25 to 30 days from when you receive that, that puts you really heading into March. So all of the outdoor things that are going on are going to pick up. Hopefully, we have a great March. Sometimes we do. We want you to push that kind of as far as you can, but you got to stay close with your lender, because you don't want to lose the loan, because they can just pull it off at some point and say, well, you didn't get it back to me within 20 days, so you're going to the back of the line. So make sure that you really stay in touch with your lender on that. It's very important, but it's a great strategy in order to get closer to spring. All right, so now we're into the employee retention credit. And the reason that I spent so much time up front on the PPP was because we want to be able to back the percentage back down to about 60% on the labor side of things. So we can then start using some of the labor that would have been in the used for PPP that got over 60%. We can now begin to use that labor for the employee retention credit. When the PPP came out last year, you were not allowed to have a PPP loan and an employee retention credit that I've abbreviated here, ERC. You couldn't have both, and now you can. And as far as we know, it is retroactive. That means that we can now go back and look at 2020, and we can file to get some of that money as well. That's a gigantic windfall for companies. So it's also refundable. If you didn't owe as much payroll tax, in other words, your amount of your employee retention credit is beyond what you paid in payroll taxes, you can also get a refund on top of that. So more money. It can be paid in advance of the quarter, taken with each deposit, or taken at quarter end filing. We personally will be doing it at the quarter end filing for our clients because we don't want to get into this kind of reconciliation process and what if we make a mistake and so on and so forth. So they can be used if loan forgiveness hasn't been initiated. It's not really clear if you've already got forgiveness on your loan. They have not clarified whether you can go back. And there's two conflicting pieces in the bill. One says, hey, you kind of can, and the other one says, hey, you absolutely can't. So there needs to be some clarification around that. And we would expect that here in the next probably 30 days or so, I would imagine. So I would say if you've used, you can go ahead and do the calculus on it, but if you've already filed for forgiveness, it may be a bit of an uphill battle to use the employee retention credit for the last loan. Now, it doesn't mean that you can't use it for the expenses that are subsequent to your period that you had the loan. So let's say your period expired, your usage period expired at the end of September, you'd still have Q4 that you could look at. So I would expect clarification of receiving the credit for prior quarters to happen, as I mentioned, in the next month or so.
Okay, we have some questions.
Okay.
Does your accountant and or payroll bookkeeper need to be the one to apply for the IRS employee retention credit?
No, you can do it yourself. You can absolutely do it yourself. It's going to take a lot of work to do this. We've already kind of warned our clientele. There's a lot of work because you have to go through employee by employee and evaluate what can be used for PPP, what can be used for the employee retention credit. So there's a lot of work in this. It's not a snap the fingers. It would have been great if you said, hey, we got $1 million loan, therefore, I can back if I spent $800,000 on payroll, I could have only needed to spend $600,000. I'm going to go after that credit for the $200,000. It doesn't work like that. It's employee by employee. So as soon as the employee hits $10,000, then that employee is off the board. And I'll clarify here.
Okay. And one more, can we apply for wages and benefits for employees who are furloughed for ERC calculation?
It depends on the size of the organization. So I'm going to take a look at that here. So in 2020, if you had greater than 100 full-time employees, you can receive the ERC for paying employees for no work. So if you furloughed them, but you continued to pay them for doing no work and you had more than 100 full-time employees, then you can get the ERC for that. If you had less than or equal to 100 full-time employees, which is defined as 30 hours per week, you can receive the credit even if you're paying. And that's where a lot of the restaurants are going to be. So you can pay them, but the control group rules apply, and that's important. So let's say that you had 5 restaurants and you had 150 employees among those 5 restaurants, and you had substantial ownership in all of them. That control group rule would apply to you and kind of kick you out of that less than 100 employees. Now, that's not going to make as big a difference in 2021, but it certainly does for 2020 because that pops you into the greater than 100 full-time employees. So your operations were either fully or partially suspended due to COVID-19, or greater than or equal to 50% reduction in sales for any quarter until sales recover to 80% of 2019 same quarter. So most companies are going to get this for Q2. So they had a gigantic fall off in Q2 because everything closed up, and you get to take that credit up until in the quarter past when you recovered it to 80% of your sales. So let's say that Q2 you're down 55%. You obviously qualify for Q2. You also get Q3 because Q3 it doesn't end until the end of the period in which you hit 80% of your sales of prior year. So if you hit, let's say you're down 15%, you hit 85% of your sales in Q3, at that point you would get Q2 and Q3 and you'd be done until you had a major reduction again. So that's a little bit of what you have to remember around that. I know when I first read it, I was a little bit confused, but you get the quarter in which it recovers to 80% or more, and then you don't get the quarter after that. So most companies, I think, will at least get Q2 and Q3 for the employee retention credit for 2020. If you have less than 100 employees and you had or 101 employees, I should say, you'll get that money. So Q2, Q3, and Q4, it's applicable in 2020. Q1 is just that little stub of 3/13 through 3/31. And back up to the operations fully or partially suspended, you would get the employee retention credit for that time period only. So if you popped right back up in let's say that you had a reasonably decent Q1, as most restaurants did. We were off to a really strong start this year, and then everything kind of fell apart. And let's say that you had to close from 3/13 to 3/31 due to a government mandate. You could take your employee retention credit for that time. So these rules are fairly intertwined, and they look simplistic, but they're pretty complicated. So the 2020 credit is 50% of the first 10,000 or $5,000 of wages plus healthcare per employee for the year. Now that's going to change in 2021, but in 2020 it was the whole year. You could only get up to $5,000 of credit for the whole year. So next year it's a little bit different, or the 2021 is different. And you have to remember that the bottom point here is critical because it can really throw a wrench into things. There's no double dipping. So no double dipping with PPP costs or other credits such as the WOTC or the FFCRA or any other programs that are out there. You have to make sure that you don't double count those payroll costs. If there was an audit, they may catch you, they may not, but just make sure you're not double dipping just to stay above board. In 2021, the game changes. So this is in effect until 6/30 or first 2 quarters of the year. So if you get Q1, you'll get Q2. Remember, it's up until you recover to 80%. So less than or equal to 500 full-time employees, and those are people that are 30 hours per week. So this is a little bit of a different calculation. It's just counting your full-time employees, not part-time that use less than, or a lot of servers work 28 hours a week. Those people wouldn't count. So it's not the Obamacare type of calculation. This is people that are 30 hours a week or more. Yeah, same for 2020 as well. Same deal where your operations are fully or partially suspended due to COVID-19, or greater than or equal to a 20% reduction for either quarter versus 2019 same quarter, not 2020. Most people's sales were down. If you can also use the prior Q4 as well to roll in if you were down like 23% or something in Q4. A lot of people were, but I don't think we're going to have much of a problem for most people of being down 20% for Q1. So this is available for Q1 and Q2. Each quarter independently, and this is really important because last year, if you recall what I said, it was $5,000 for the entire year. This year in 2021, it's each quarter independently. So each quarter independently. So in Q1, if you wanted to get advance money, you could use Q4 versus Q4 of 19. That's allowable for Q1. For the calculation of the 20%. But most people are going to wait until after the quarter's over to compute their percentage of being down. So the credit in 2021 is 70% of the first $10,000 per employee per quarter. Recall last year was 50% for the year up to $5,000. So we've gone from $5,000 worth of credit to $14,000 with all of those other expenses that have been given, the employee expenses, the supplier expenses, all those additional expenses that they added into the bill. This is pretty exciting because we can get up to $14,000. Again, no double dipping. No double dipping. All right, questions?
We have one last question, I believe, about the PPP. So can you use this money to reimburse your business for food and beer losses?
Food and beer loss. So the expenses, you would have already incurred those, provided you took an inventory, you would have already incurred those. I think it's expenses that you have rather than expenses that you had. But if you are an accrual base company, I think that those are expenses in the current period. They're perishable, you lost them. Beverage is an interesting one because beer is remember these expenses need to be perishable goods. So beer is perishable, wine can be perishable, liquor probably not perishable. That's the one thing that we don't have clarity around. But I think that beer certainly is perishable, and wine you could argue is perishable. So food definitely perishable.
All right, put out a shout out for the last couple of questions in these last couple of minutes.
Rick, I think one of the questions, just people are thinking, what's their window of opportunity for, as a business owner, to start taking advantage of this? When do you start seeing the window closing? If it's after March, after February, what is your time frame on these things for your clients?
For the employee retention credit,
yes,
we're working on it now for last year, and then we'll work on it in April for quarter 1 and July for quarter 2. So you want to kind of get it in there and amend, or on the 941 you'll be able to make some adjustments for this year. Last year is a little trickier. You may have to go back and do a 941X, but it's going to be a little trickier for last year, and the language is unclear whether you're going to be able to have this kind of cumulative adjustment. So wait for more clarity on that. As one of the authors of some of the articles that I was researching said, it's really clear as mud again. So and the guy said, I've read it over and over and over to a ridiculous amount, and I can't figure it out. So we should see clarity on this cumulative credit, I would think, here in the next 30 days, because there's going to be a lot of pressure around this. So you can also, one of the things I didn't talk about because we're not doing it, if you're really in need of money, you can fill out Form 7200 and get an advance on this. So you could take advances and then reconcile it at the end of the quarter. So if you really need money, you can just get an advance. So you file that form and you should have your money in a couple of weeks.
That's great to know. We had one of the questions ask about the availability of this webinar. This will be published on the hub.wahospitality.org website. Lisa, you'll be putting that up on there by the end of the day today. So if you go up there, we're going to have Rick's PowerPoint presentation that you can download, as well as the video up there that you could watch again to get further clarification. Thank you.
Yeah, and I would really encourage everybody to write your questions in, even if we don't answer them on this. Get a hold of Lex or Lisa or me, and write your questions in, because we have spent an enormous amount of research on this. Even though it's a relatively new announcement this year, we spent a ton of time on this. We used a lot of legal. We used a lot of national CPA firms. We used a lot of our own brain power. We read through all the research that's been done by the experts. We've read the bills ourselves, and the interim final rules around this. So I'd really encourage you to write in on this, because we have a lot of horsepower that we put behind this, and I think we can help clarify things, because things don't always come over to a broad audience as specifically as you would need them for your own individual business. It's a fairly complicated interweb of things that you need to do to pull this off correctly, but it can be extremely lucrative. We looked at we're developing some software with our payroll company, and we looked at one particular client. The credit was $400,000 because it's a large company, a large restaurant. So this is not an insignificant amount of money. And even if it's $10,000, it's $10,000. You can do something with it. So this is for me, this was the most exciting piece of this next round of PPP. The clarity around supplier expenses and having this employee retention credit be retroactive to 2020 was a game changer for a lot of people. So I know it's really hard and some people are thinking about pulling the plug right now, but there's a lot of money out there right now, the PPP money, and then this employee retention credit sitting right behind it, various grant programs, and then what I firmly believe will be another round of stimulus. First we got the rescue, then we have the recovery. You can't recover without any money. So I think that we will see more stimulus in 2021. So you really need to kind of bridge that gap. I was saying you have to get to spring. I think spring starts helping, but certainly when we get into summer, if we get another round of stimulus and we maximize this one, I think a lot of people are going to be in relatively decent shape going into summer, and then we're going to be fighting for staff again and arguing over cooks and all that kind of stuff. So we look forward to those days again.
Does the ERC have to be used for all pay periods in the quarter, or can it be used for individual pay periods in succession? And what happens if you get PPP money in the middle of a quarter?
The two are separate. I think the PPP is separate. You just can't use the funds for two separate things. But it's really a quarterly calculation. It's not a month by month calculation. So in other words, you can't be down 50% and say, well, I get it for that month. It's a quarterly calculation. And that's why we are waiting until the end of the quarter, because we could see those whipsaws between, and something could happen. The sun could actually come out and be really great. And, March comes out and blows it away, and it overwhelms, period 1 and period 2. And we don't fall into that ERC. So it's really a quarterly calculation. Now, if you think you're going to be down for the quarter, you can certainly use the credit each time on your payroll. So there's some benefit to doing that. I think it would be better to get to the end of the quarter and calculate everything to avoid too much brain damage.
When is the expiration date to use second draw PPP funds?
So it's going to be 8 or 24 weeks. There's no alternative coverage period like there was last time. So you have 8 to 24 weeks from when the loan is funded. And that's why we want to push that funding date out as far as possible, because if we can stretch it out over the 24 weeks and make it work, and we can take, the first 2 months of the year, basically the duds other than Valentine's Day, January, February, and then we can start using that money in March when we have start recovering somewhat. That gets us squarely into summer to use that money.
So ERC in 2021 also has a 100 employee hurdle for calculation?
Nope, it's 500. They changed it to 500 full-time employees. And that was huge, because if you've got a small company, let's say you have, 4 or 5 restaurants or 3 to 5 restaurants, and you've got, 120 employees, which we see a lot of, they were kind of penalized by that. But now in 2021, it's less than or equal to 500 full-time employees. Remember that full-time employees, 30 hours per week. It's not dump them all in a bucket and divide them by 30 and see how many FTEs you have. It's full-time employees. It's not that overall add them all together and divide it by the number of bodies. It's full-time employees, people that work 30 hours per week or more. Only them, not 28, not 20, not part-time people. Those don't add, they don't calculate as a half. They're people that are 30 hours a week or more.
And you mentioned a form a little while ago to get the advance. What was the name of that?
It's Form 7200. So I think if you do a Google on Form 7200, it should come up with some form. I've only looked at it once.
And if we were holding taxes by using the ER Social Security deferment in 2020, can we amend our 941 to restate this as the ERC instead of the deferment?
Ah, boy. As long as you're not double dipping, I believe you probably can. There's just no double dipping. That's what you have to avoid.
Thank you so much, Rick. We appreciate this. Once again, we are going to record this and it will be up online on our website at the hub.wasphospitality.org. And any last comments?
Yeah, I think, the biggest thing for me is a lot of this is fairly new. And what happens is they issue it and everybody gets excited and we run out there and we start planning for things, and then they come in and they clarify things. That's my biggest fear around a lot of this is the rules, as we've seen several times, the rules just continue to change. So be cautious, give it a little bit of space, wait for a little bit of clarity before you start claiming this. Kind of unless you're in dire cash flow situation, give it a little bit of space because it's fairly new, and there's some Section 206 and 207. There's some issues with that, some contradictions. So I think just give it a little bit of air and let them come out and clarify things.
All right. Thank you both so much. And we will see you next month.
Awesome. Thanks, everybody. Have a great day.